dreamers dwell. Get your hustle on and that wealth build. From the dirt to the gold, every story's untold. Cash flow Savannah, where ambition takes hold. Started with $1, stretched it to a mile. Every setback just to settle for style. Stacking paper, vision clearer than glass. Hustle game.
Welcome to Cashflow Savannah. Chandler, how are you today? You doing all right?
Yeah, I'm good. It's been a while, so it's good to jump back on the computer and talk to you.
Yes, one of us had a really rough fourth quarter last
Yeah.
year, and recording longer content, it just absolutely left the building, unfortunately. But
We're cool.
2026 is going to be good.
It's good to get back on and kind of go over what we saw in 25 and
Yes.
see what we're seeing in 26.
Well, and I can assure everyone, we might not have been recording a whole lot the last few months, but we have been working. We are knee deep in real estate and we love it that way. And we want to do a rundown today on 2025. We had a lot going on in 2025. I've been telling people, this is the truth. I've been in this industry over 22 years, maybe 23 now. And this was my third downturn. I really consider 2025, the last half of 2025 was a bit of a downturn in the real estate market. It's been tough. And, we're selling real estate, we're managing real estate, we own real estate. Like we're on top of this on multiple different levels. And I feel like we have the right to talk about, 2025 and the highs and lows. So, when you think about early 2025, Chandler, we had a huge project going. We launched 5 very interesting short-term rentals in Savannah. That's kind of how we started our year. And then that's going to kind of tie into how we end our year. Talk about the first half of 2025 because we were still doing pretty well and things were kind of starting to slip a little bit, but I think the first couple of quarters weren't too bad. What are your thoughts on that?
Yeah, no, I mean, you could tell from 24 was people were still adjusting to the kind of, I don't know, it was definitely slower and people were trying to figure out the market kind of thing. All right, I'm trying to figure this market out, what to do in this market. Because I think there is something to do in every market. You just kind of have to adjust to it. You say it's your third downturn. This is like my first, I would say, I started working like right after COVID when everything's just rocketing. So it was super interesting to see a downturn.
Yeah, well, and in an up market, everyone looks like a genius. Okay,
Exactly.
and they do,
Yeah.
and I did too. Quite frankly, we did very very well after COVID. And just to recap, in Georgia, we did shut down for 30 days, and that was very tough. It was very tough, but we never had a mask order in Georgia. You did not have to wear a mask anywhere per Governor Kemp's order, which I loved. I don't like wearing a mask, and that brought in a lot of people to this area. They were spending money. They wanted to stay here. They wanted their freedom, and I had a guy stay in one of the houses that I managed at the time. And boy, he was like, you have no idea. I've been cooped up in an apartment in New York City for 3 months with my kids. He's like, I'm so happy to walk around outside. We're still kind of coming off of that high. It was really great money back then. But 2025, we did see a continued decline from 2024, although it was kind of slow in the first couple quarters. It was okay, I would say.
Yeah, it wasn't. I think people were just still trying to grab for that post-COVID like money. They're like, when is that going to come back, kind of thing.
Yeah.
I'm kind of gotten to I don't know if it's coming back. I think it's in a consolidation period kind of thing. Like, hey, real estate doesn't just jump up forever. It jumps up, consolidates, kind of like stocks. Stock has it run and then it'll consolidate.
Right.
And I feel like the consolidation periods is when it gets boring, but it's a good time to start getting aggressive, really, if you
That's
think
right.
about it. Because people in the United States, like, they don't do boring. Like, that's boring. But I feel like things are consolidating and kind of sitting, and like short-term rentals aren't that cool anymore. That's when you're kind of like, oh, okay, let's try to jump back in it and see how we can make this work and get ready for the next run, kind of thing.
Well, the one thing I did notice from the front row of this downturn was sentiment. Okay. And you always hear about sentiment, but retail markets, I mean, it really is based on sentiment. And you could just partway through the year, you could just feel the sentiment turn. People started feeling tight. They started feeling like they shouldn't spend money. They started feeling like they shouldn't go on vacation. And we could hear and almost taste it, and that's when things kind of started to slow. We also got another punch in nose here in Savannah. We've always had a very strong market. Our port is very strong now. I'm very hard for long-term rentals, no matter what the market. I always believe in long-term rentals, especially here where we have so many jobs. And one thing that really hurt us this year was that Hunter Army Airfield, which is located here in Savannah. Fort Stewart is in Hinesville. Hunter Army Airfield deployed, I think, 6,000 troops. I forgot what Kyle told me, but it was a very large number. And because sentiment was kind of getting very negative, a lot of the guys that were renting, they canceled their leases. They can do this legally. It's in every, lease. If you're U.S. military and you're called overseas, you can cancel. And a lot of them did. And I mean, thousands of them did. So as property managers, that was tough. Obviously, we let everyone out. Everyone around town did. But because the market had been kind of slowing already and sales were, slowing down, like we went from like 22 days on market to 87 days on market, which is a very large jump. And now that's a very normal amount for any market, to have about 3 months worth of inventory. But here in Savannah, we had been used to things just flying off the shelf. And so it was tough this year as things continued to slow down. Homeowners could not sell. And they, for some reason, in the second and third quarter, they all of a sudden said, hey, it's probably not going to sell. Now that my perception of selling season is over, let's just throw this on the rental market. We also had a lot of people with houses on the market also put them up for rent because the owners were like, whatever it is, I'll take it. So in addition to properties being flooded onto the market from U.S. military, we also had all these homes that weren't selling also flood the market. And man, the rent comps just kind of kept creeping down. And we started to have owners going, why is it taking, over a month to fill my rental unit? Well, we had this influx of inventory. So that was really tough answering those questions. It was really tough.
Yeah, no, it was a ton. Like, it was kind of all of a sudden too. It was like, hey, there's nothing. Well, we would look at rent comps. It was like, oh, there's not a whole lot out there. And then all of a sudden I would look and it's like, I was like, holy cow, why is there so many? Another thing that kind of brought it up is I listened to Scott Bessent, the Secretary of Treasury, a ton. I love listening to how he thinks about finance because he grew up, he's been doing it since the 80s. He's been talking about the rent softening too. It sounds like they want rents to soften, because how they're talking about the affordability crisis a ton. And he's like, rents have softened. Kind of like bragging about it. Like, hey, we're softening rents. So that's another thing that kind of brought me up while you were talking about that is like, I don't know if that's what they want. I know they don't want housing prices to go down. They want the asset prices to continue to go up. But I know they were kind of bragging about the softening of rents.
Yeah, they definitely softened. No, we're not talking 10%. We're talking maybe 2 to 3%. The top properties still rented, but interestingly enough, the prime rental season is spring and summer and early fall. And then the prime selling season is spring and summer and early fall. And it was like early fall kind of came. And that's when we saw everybody just go, oh, well, it's not going to sell. Let's rent it. And it was so weird how they just all did the same thing at once. But again, I think that comes down to kind of our word of the day, which is sentiment. Sentiment kind of shifted. Well, this isn't going to sell. I've got to do something else. And then everyone did what everyone else was doing. And if you're an investor, you should never do what everyone else is doing. You should be opposite day. Okay. If they're freaking out, you need to buy. If they're all buying, you need to not buy. Right. And the same thing with the rental market. It's just like you need to kind of commit to a strategy and hang on to it because houses were selling. It was just taking longer. So if you wanted to sell the house, and I dealt with this with several of my sellers, I said, look, I understand you want to sell. Let's not give up here. And sure enough, this one house that sat for probably 3 months, boom, it went under contract and sold just right after 87 days. It was kind of crazy, but he didn't want to re-rent it. I said, hang in there, and it worked out. It's easy to go with sentiment.
Yeah, no, I agree. I think it goes back to, and I kind of like looking at the sentiment of, all right, so I would talk to like private money lenders, and then obviously we have our own rentals. And I always like to compare like what rents fast and then what was sitting. Because there were some properties that we would see would go up and all of a sudden they're rented after a day. And you're like, what in the world? And we had them like priced appropriately, pretty high actually. And like those would rent in a day and then some were sitting. I'm like, why are these sitting and why do these rent? Like super quick. Same with selling properties. I would ask the private money lenders, hey, like what's sold quick and what's been sitting? And honestly, it just seems like the more like updated houses are just, they sell quick. That's from the sell side. That's what I heard, private money lenders. And then our rentals, it just seemed, now there were some new constructions that have just sat. I will say that. Like there's some people that bought some new construction. So those are obviously updated. But it seems like the more updated homes, it was so hard to pin down the rent side because there were updated homes that were sitting as well.
Yeah.
But I know on the sell side, if they were well done, they would sell pretty well.
That's very true. Well, and Chandler, that leads me to one property that I want to talk to you about, and you know what property I'm speaking about. It's in Savannah. It's in the historic district, in a great location, actually. There are no rentals in this area. It's right next to Forsyth Park. And so one day we had an owner contact, a super great guy, and it's a duplex, okay? And you and I went over that day, and there I'm telling you, no one rents in this neighborhood. It's so expensive. And we were like excited because there wasn't much inventory and there still isn't. The upstairs unit was great and he listened to us getting the stuff out. He had stuff in there, which you don't want that, okay? You want a premium product. He did listen to us for the upstairs unit, but then he shoved a bunch of the stuff in the downstairs unit. And then you and I also gave him a lot of advice on that downstairs unit. And our number one piece of advice was that it needed a laundry, it needed a washer and dryer because he was adamant. We were like, hey, let's just rent the whole house for more. Like, cool. And he was like, no, we're going to rent this separate. It was a single family that had been turned into a duplex. And he kind of gave us all these promises but he didn't want to do any upgrades. He also wanted to set the rate himself. And we both told him, you're too high, you're too high, there's no laundry. There's also no parking, but people are okay with that. And it was interesting because, boy, that upstairs unit, we had people fighting for it. It was rented within 2 weeks at top dollar. And of course, he was thrilled. The downstairs unit is still sitting vacant today. I It still has stuff in it. It still has no laundry. We've dropped the price multiple times. Like if this guy would have listened to us, he would have had, $10,000 to $15,000 in his pocket by now. And it's still sitting vacant. And that's where it's like, if you can get a pro, listen to them. I'm still like, I wish he would have listened and I still wish he would today, but we can't get anywhere with it.
Yeah, there's a bunch of egos in this world. And sometimes I feel like when you're investing, you have to let go of your ego and just let a math problem solve everything.
That's right.
Like, I've just learned, hey, like, oh, there's opportunity come in and there's this and there's that. And people try to say all this stuff. And I'm like, no, let's just like stick to a math problem and the math problem will solve everything. And that's kind of been like my 2025 thing is like, hey, I'm trying to let the math problem solve everything and kind of go with that. As far as his rental, yeah, he can just do a math problem real quick. All right, I dropped my price. Is it better to sit vacant or drop the price or spend the money?
Right.
Because he don't want to spend money. So, hey, all right, I don't spend the money or I spend the money and put washer and dryer in. I get higher rent. And some people just don't want to sit down and do a math problem.
Yeah.
And, it's just like a simple math problem and it'll help you out in the long run. But
we wanted to spend maybe $5,000. Okay, it wasn't 20, but he would have that 5,000 in his pocket multiple times over if he would have listened. And we could have had the guys to do it. No, I have my guy. And it was all the things. And the other math problem people don't do is vacancy. So we've had owners, fight us over $100 a month where we're going, it's got to be, this number. No, I want an extra $100. And then the dang thing sits for 2 months and then they listen. Well, then the market had dropped more. We've had a couple people end up chasing that number down. And I kept saying, if you just would have listened to us day one, we probably could have rented it much quicker and for a higher amount. And the further we got into winter, it just got tougher and tougher. It was so tough. I can't even tell you, like, I don't want to be rude to people, but I'm as motivated as they are. We don't make a dime until we find a tenant. And when you've got the owner standing in your way saying, no, you have to overprice it, we're now turning down a lot of properties. If I find that the owner isn't reasonable, I'm just not interested in losing money managing for them. I turn down way more properties than I pick up because if they're not open to listening and they know it all, I'm going to wish them the best somewhere else. I had a lady last week. She wanted $800 a month more than what I told her that property was worth. And she flat out said, you've got to work with me. And I said, ma'am, this is my job. Like, you think I don't know how to comp a property? Like, I know you have this one house and you think it's super valuable, but it's a math thing for me. And I just said, I'm going to wish you the best and go ahead and find another property manager because a vacant unit it's a lot of work for us for $0 in revenue. It's horrible.
Yeah, no, that's what I've been kind of. Some people just need to get better at math. That's all.
Yeah.
And I hate math. That's the thing. It's like, I'm like, oh, what do we need math for? But math like runs the world. Math and science. So
get comfortable with math and don't listen to sentiment. Think for yourself. I mean,
yeah. Mm-hmm.
Don't
try to force the math too. It's easy to try to force that math on real estate. It's so easy. Oh, well, I can subtract this out. Back to the vacancy. I try to educate. I have a bunch of buddies at properties and I'm just like, hey man, like just be careful with vacancy. Like just do not, because vacancy can just kill everything. It can kill 2 years worth of cash flow. That's a big, they call it vacancy. What do they call it? What's the term? Cash flow killer. Silent cash flow killer is what I've heard. Vacancy.
Yeah.
So you have to really think about that. And when you're doing numbers, you have to calculate that. You might have a month of vacancy. I really try to push that on my buddies.
Well, as things started to slow, probably the biggest thing hit was short-term rentals. Talk about the difficult difficult conversations we've had over and over with our short-term rental owners. And for the audience, we manage high-end short-term rentals and we manage low-end short-term rentals. Okay, we manage all the above. Talk about what started happening there, Chandler.
I mean, I just think I've always been like, okay, these short-term rentals are working. So I've never said anything, but always knew they weren't that good, if that makes sense. Like the furniture and everything, I wasn't like impressed with. So this year it's just catching up to them. Like it's just core is catching up to those people. I used to not say anything because it was working. Hey, sure, go ahead, put the cheap decor in. It's making a couple thousand. Like go ahead. But now it's like no. Kind of back to everybody looked like a genius kind of thing. Yeah, that's the only thing that I can think of that helps short-term rentals. Like I don't know what else to tell you. Have a successful short-term rental during this period other than having some pretty good, I mean really good decor, not just pretty good, because there's a lot of pretty goods out there, honestly. There's a ton of them. And so we have to get really good at decor with amenities. And I think that's the only solution if you're struggling.
You can't change the location.
Or you just buy some crazy deal, which I'm not seeing those either.
I am.
The numbers are so tight. I mean, the numbers are tight. And so you have to see the opportunity. Okay, if I do the sweet decor, it really helps. So, and we have numbers to back up sweet decor now.
That's true. Well, and as the K-shaped economy really kicked in to where the bottom half really wasn't doing much and the top half was doing just fine. And, you know, when you have a oversaturated market, which almost every short-term rental market is, Savannah is not perfect. It's not too oversaturated because of the limit, but we have, you know, we had less people spending money, so it felt like it. But we watch it from the sidelines. The nicely decorated homes that we had, the luxury units, were booking first, and they were booking for a decent amount. Now, I think we've had a little bit of a price, you know, reduction, but that's okay. They were booking, and the stuff that where the decor mismatched, it was older. I mean, they were sitting vacant for months at a time. They, quite frankly, they still are. We're seeing a little bit of an uptick, but I mean, it was brutally clear which properties were going to book and which ones were not. And our owners that had invested the money up front and brought the luxury, you know, decor in, they were okay. Now they were still complaining a little bit, but the owners that didn't, you know, now they had less money to invest in the decor, and all of 0 of them listened to us and agreed to put it in because now they're behind the curve, right? That now they're so behind because they've been coming out of pocket for the payments. They don't have it. And it was just tough. We kept having the same conversation over and over. We're just like, look what we did over here and look at their bookings. I mean, one of the units that you redid personally, Chandler, average daily rate is up 42% from where it was before you decorated it. That's huge. That owner has gotten that money back plus some now, and that decor is going to serve him for years to come. And these guys that waited and kept their hands on their pockets even when they were making money, they refused to do it. Now that they're not making money, you know, it's just a very tough conversation. It's really tough.
It's tough too because they've been eating money for months.
Right.
And then I don't want to spend more money after eating money. I get the kind of hassle that they're looking for, but I think now that it's kind of clear, like, hey, here's your property before decor, that we can say, hey, it was getting $412 a night, and now it's getting $620 a night. Like, there's before decor, and there goes back to your basic math problem.
Right.
It's like, all right, here's the math problem. You got a 40% increase. Here's what we can do. So that's always I'm like, hey, there's a math problem to it.
Not only is ADR higher, you've got higher occupancy. You've got one with 0% occupancy, 0. Okay. We've had several owners where we could not even send them a statement because it was 0. There was no money. And then you've got the guy who invested the money getting a higher nightly rate, and he's getting 60 to 85% occupancy because of the decor. Obviously, it's a great property at a great location with great reviews, but like that's what brings great reviews is when the guest walks in and goes, oh, this is gorgeous. It looks just like the photos. The host was wonderful. It smells nice. You know what I mean? Like you want that luxury in all senses. And that's part of the experience that we provide. It's incredible, the difference. You're talking thousands and thousands a month difference with better decor.
And it also changes your avatar too. It's a better avatar. The advice that I see a lot is like, just sell to the wealthier people. They don't complain as much, and it's very well true. So we just completely changed an avatar, and it's been pretty good. We don't get too many complaints. I like that part of it too.
Well, and when there are, 50 units available for your dates and you're looking on Airbnb or VRBO or whatever your platform is, when you have so much available, there's not scarcity. Okay. They're going to scroll until they find the most beautiful, gorgeous property. I would too. I'm sorry, but I'm visual. Who doesn't want to stay in the nicest place? So, you've just got to be able to stand out on so many levels. And decor, that is the front door, is that hero shot to your listing. If they never click on your listing, you aren't going to see any money from that person. And so that's our primary job as pros. We know how to make that first photo amazing. We're super hosts now. We've got the service to go with it. Like, I'm really proud of what we're doing. But the crazy thing is, we're the same manager for these other, tougher units. And I'm sure you wouldn't think the same when you look at it. It's like, oh my gosh. But unfortunately, the owners are going to have to kind of suffer the consequences there. There's just not much we can do. They're going to book something nicer over that unit. I would too, quite honestly.
Yeah. And interesting enough, like you go back to macroeconomics, there's clearly a divide. The rich are getting richer and the poor get poorer. And so those people are still traveling like, dude, this economy's freaking awesome. And then you got the other half, it's like, this economy sucks. Everything's too expensive, especially at the college kids coming out. They're like, dude, everything's crazy expensive. And they're like, I can't travel right now.
Right.
You kind of have to be like, hey, all right, so we see this big divide. And I just only see it getting worse and worse and worse. I don't see how you fix it. So you just go sell to the person that's getting wealthier and wealthier and wealthier, in my opinion. So that's another thing to think about in the short-term rental world.
Absolutely. Well, and my last point I want to make is that when you have the worst decor, you're going to have the lowest prices just to get someone in. And we had the lovely experience of dealing with that as well as property managers. And we had some tough guests. We had some tough insurance claims this year. And that's such a lose-lose situation for us and the owner. And of course, we take the blame for it. Oh, you put in this terrible guest. If we have to price it so low to get it booked that it attracts a very rough crowd, I just don't want to do that. So we do kind of cap that bottom if we can. But even though we do that, we don't let people in for nothing. We still ended up with some really tough cleanups and insurance claims and some damage. And it's so frustrating. And I really want to throw it back on them and go, quit blaming us. We've been begging you to make this more luxurious so we can up the rate and get a higher quality guest, and you won't. But yet it's our fault if, some guy brings in bed bugs. Well, yeah, that's going to happen when all you can attract are lower end guests. So anyway, just a word to the wise, like, please listen to pros. Like, we really don't gain much by decorating as far as financially, but we do gain on the back end right along with the owner when the unit books more. So anyway, it's just so important to understand that when someone's giving you advice, they really are trying to help you. It's really not a sales gimmick.
Yeah, no, I don't think we sell. I'm not trying to sell anything when I'm telling you. I'm trying to help these people so that they're not like paying for vacancies and just a total. I'm like, dude, I don't want to, because honestly, at the end of the day, like, I don't want to listen to them. I want to give them all the advice. I hope they listen, because if they don't take the advice, they're probably going to come back to us and complain. And I really don't want to listen to it.
Well, that's why I've got a lot choosier about which owners we'll manage for, because if I can tell in the initial conversation that they aren't going to listen, I've been down this road. Okay. They insist on their way, and we go, okay, we want your business. We'll do it. And then 2 months later, when the property's vacant, then now they're mad at us because it's not rented, it's not this or it's not that. And I'm just like, I'd rather not even work with you from the beginning. And I have told people that I'm like, look, you know it all. You go ahead and manage it. I don't need to lose money managing for you. I've lost money managing for those people where they get frustrated. I don't want people angry. I really want them to make money. But if they know it all and they're going to go against my advice, then maybe they should find someone that, make a unicorn come out of a hat. Like, go ahead. I don't have one. I'd love to, I've just gotten a lot choosier on who I will manage for, because I've been down that path before, and it's not fun for either of us. So how about I just cut this off now and save my reputation?
Yeah, no, I agree. I think it's the best thing to do. I mean, you get good owners. I love owners that are just like, hey, I really care about their guest experience. Like, I really kind of, like, cash flow is in their mind, but it's kind of like in the back. Like, hey, I really want this guest experience to be great. I think to translate to cash flow when you really think about that, if that makes sense.
That's right. It's got to be priced right. It has to be advertised right, and it will fill up. And guests will love it. Once you get those reviews, man, that's money. But when you walk in and you go, because the couch is so old, it's like your grandma's couch, and then you can tell the bedding is old, and then nothing matches. Like, if the guest has an ick when they walk in the front door of your short-term rental, it's very unlikely they're going to leave going, what a 5-star stay. They're going to go, it was like a 3 or 4-star stay. That review is going to cost that owner money for years and years. Frankly, it costs us money too, because we want to be super hosts, and we are. But it's just tough. It's tough. That guest experience is everything. And that's where the money is.
So kind of get back to the 2025 thing. I feel like we kind of went over a lot. Is there anything else that we missed in 2025? Like kind of obviously slower market. The core is the only thing I've seen that actually raises your average daily rate. Kind of that's a math problem again. Like I wish we could put something out that kind of we can show because that's proof of work. That's what I'm big on right now. Is like because a lot of people could be saying stuff back in the day and I'd be listening like, ooh, that's awesome. But now I'm just about proof of work. Like, hey, here's what we did. Here's what it did.
Yeah.
We're not just making up decor like to sell decor. Like, hey, decor actually works with a math problem behind it.
Well,
Long-term rentals got hit in 2025. What else? How was the agent side of things?
agent
2020.
side, right along with it. I mean, we were going crazy, and then fourth quarter of 2025, things really slowed. And let me tell you, as sentiment went down, we found better and better deals for our clients. And we were sending them out to the buyers list. We send out several, a week that way. And they were moving a little slower than I preferred, but people were listening, but less people were listening. Where we would have normally had 5 or 6 people going after a deal that we sent out, we would have 1 or 2. We were still able to move real estate, but the deals just got better and better. In fact, we ended the year with this really crazy off-market duplex I was so excited about, and it really went so quick. So if people will listen, they're doing well. And I kept telling people, hey, we're in a down market. One thing I do want to mention, which we haven't talked about yet, Chandler, was that as the market started tipping, south, the people that really got hurt, even more than the short-term rental people, even more than the long-term rental people were flippers. Flippers had a very hard time. It is not smart to flip into a down market. And you don't know it's a down market until you probably are halfway through the rehab. And that's really tough. Okay, I'm not here to say I'm better or smarter or anything than anyone, but I watched that from the front row. It was very tough. And some people here in Savannah that had done a ton of flipping lost a lot of money. We saw a lot of properties get taken back. I do want to point out, though, I do ream on hard money a good bit because I'm good at math. And you're paying a lot for the privilege of using hard money. And most of the people that got in trouble with hard money, it was with hard money is what I mean to say. I'm sorry. That's because it was taking a lot longer to sell. Not the flipper's fault, okay? It was the market. When you go from an average days on market to less than 30 to 87, your holding costs just tripled or more. And if you don't have that in your numbers, it's going to be really hard to make money. The other thing is that rehabs always cost more. They always take longer. And you have to build that into your numbers as well. And so, when you kind of have that 1-2 punch, I saw a lot of people lose properties over that. And I just feel terrible. We do our absolute best that it wasn't really my clients, but a lot of good friends. We had actually some larger flipping groups, have some real financial issues this year. People that you would never think, you think, oh, they know it all. They've done this many flips. They're geniuses. They were right there in the same boat. So Gabe Santon, who's been on the call, I'm very proud of this. Gabe Santon is one of my clients. I love him. He's with Guild Mortgage. He's a great loan guy here. And he called me early in the year. He said, I want to do a flip. I said, Gabe, you will not use hard money. I forbid it. And I said, call all your friends, offer them 10% back on their cash. And he did. And he made money on his flip. And he told me it took longer and it cost more, all the things that always happen to a first time flipper. He still made money because he was very careful about his money source and he was able to make it work. He had enough padding there and he was able to be successful. I'm very, very happy for Gabe. He made money. He's already on his second flip right now as we speak. And he listened to me. Okay. He knows I have his back. He knew I had nothing to gain by swerving him out of that. Nothing. Okay. I just wanted him happy. If you'll listen to people that are really out there to help you and don't have their hand in your pocket, you'll do very well.
Yeah. Goes back to the math problem.
That is right.
Be conservative in your math for sure right now.
Yes. The hard money lenders are hurting right along with them. Okay. I'm in no way bashing hard money lenders at all. They provide a service, and what a blessing to buy a house with no money down. Like, that's great. If you can flip that sucker quick, you're going to make great money, and they are too. And that's what they want. But these guys got left with properties that was tough to sell, and that's tough too. Like, it was just such a tough situation all around. And everyone's going to be fine. They're going to come back, but we're going to go through ups and downs, and it's just really important to protect yourself from that.
Yeah. I think it kind of goes back to, and you might disagree with this. So we're not, so like post COVID, it was like big, very cash flow heavy because everybody's making a ton of cash flow.
Yeah.
And now it's like kind of back to, which I think it's the correct way, is cash flow is kind of just the cherry on top. You have the asset, you win on the buy and sell. In your case, it's just the buy. You win on the buy, you never sell your chickens.
Never kill my chickens.
I think it's back to your cash flow is kind of the cherry on top. I think I saw some this past weekend that kind of was like, yeah, I'm glad it's kind of back to that, because honestly, I think real estate's a very long-term game. Kind of have to wait and let the long-term gains kind of accumulate. And I think for a second there, we got very excited about all this excess cash flow. And so I think we kind of got to get back to like, hey, you're buying an asset. The cash flow will basically let you carry that asset for a while for you to accumulate those gains. And then finally, after 20 years or so, whatever, is like when you actually get to enjoy the gains. I think it's more of a long-term play, and people were kind of got short-sighted on it.
That's right. Other than being a flipper is going to make money quickly. And that's fine. Chandler, you have flipped properties and made money very quickly, very successfully. And that's great, but I'm not talking about flipping. But generally in real estate, if you're going to hold it, you're going to make a lot more on the appreciation than you are on the cash flow. So if you think the cash flow is the way you're going to get wealthy, and also if you think taking the agent's commission is the way you're going to get wealthy, you're dead wrong on both of those counts. Money is really made in the long term with appreciation, and the cash flow is great. It pays down the debt, puts some money in your pocket. My son is a great example. He's made over $100,000 just in appreciation. Now in cash flow, he's probably made a few $1,000s, okay? But you look at the weight of that amount, he can now get a line of credit on that rental property if he wants to, and take that out and buy another property. He can sell it. You know, he's had it for almost 2 years. That's not even that long of a timeline, but you look at he bought the deal well, and it still has appreciated, even though it hasn't appreciated as much as we wish. But yeah, you're right, Chandler. It's, other than flipping, it's a long play, and you have to have that mindset of like, I'm going to take this through the ups and downs, and I'm grateful for the cash flow, but the real money is made elsewhere.
And I should think flipping's not really like an investment. If you like, it's not really, you're just in a business that you're trying to make money from.
You're right.
So like, flipping, I think it's just a business you're trying to make money from. Buying a home is storing your wealth for the long term. So I think it's kind of getting back to that, because when I was first started learning, it was in that period, like, hey, like cash flow is just a little cherry on top. It'll kind of help you float some things if you need to, just so you can hold on to the asset. And then you get to finally appreciate it 20 years later or whatever. I mean, it could be earlier, honestly, but
well, and cash flow is going to go up every year as the rent increases. So maybe you're making $100 in cash flow. I think my son, I think it was about 120 a month first year, but now it's over 150 a month in cash flow, you know, and he knows it's going to grow over time as the rents go up. But yeah, so important to have that long game. As we wrap up here, Chandler, we're now in 2026. I want to talk about 2026 just for a minute before we finish. I'm calling it. I mean it. I'll stand behind it. Go ahead and yell at me later. I don't care. Sentiment has turned. I'm already seeing a pickup on all levels. I'm so thankful. We need a little bit of a pickup. You know, last December was terrible, but sentiment has turned. Interest rates are now in the fives, which is wonderful. We're seeing lenders really fight for people's business. And so I'm seeing it now where we're in a beautiful period where the properties are still kind of a lower sales price because it's been a little depressed, but interest rates have dropped to where there's a lot of cash flow left. And it's been really exciting to run numbers with buyers recently. So I am excited for 2026. I do think we're kind of past that really tough phase. I pray we are, and things are going to start picking back up, but get on it early. Don't get in 6 months from now. You want to get in now before everyone else realizes that.
Yeah, no, I agree with that. I think though you have to position yourself correctly within the market 2026. If you don't position yourself correctly, you won't see all the gains. I really think you have to position yourself with the people that are making a ton of money and get in that buy group, because I think if you position yourself in a different group, you'll be like, dang, you'll miss. I think there's two totally separate worlds, and you got to get in this world up here to where people are really gonna, I think just the asset holders, like the people with the corporate and the corporate America, are gonna make a ton of money, honestly. So I still think there's just this huge divide, in my opinion. But I think short-term rentals, I actually think they consolidate still. 2026. That's my short-term rental prediction. I don't like to look that far ahead. I kind of like to stay right now, but yeah, I think it's going to be kind of just a steady little year.
I think what it all comes down to, as you have said, is math. And
Yeah.
everyone needs to keep in mind, buy low, sell high. And if you can get a great property in a great location at a great price, I would buy that all day long. I have an opportunity now to buy something at a great price in a great location with great terms, and I'm considering it. We'll talk about more about that later, but like keep that in mind. Like don't fall in love, don't follow sentiment, follow the math. Is that a good
Yeah.
way to sum it up?
Follow the math. I mean, that has been my 2025.
Yeah.
Everybody calls me like, hey, what should I do? Should I do this with my loan and this? And I'm like, it's just a math problem, buddy. Like, don't talk to me too long about it. I don't need to like, and honestly with ChatGPT and Grok and all that, it's just so much easier to do a math problem for you nowadays. Right. And I mean, double check your math, triple check your math. Don't try to say, well, the sun shines over here and that'll make the house more valuable. And no, it's just stick to the math.
Right.
The math doesn't work. It just doesn't work.
That's right.
So that's been my 2025 all year. So
well, I think 2026 is going to be a great year for people to really consider a cash out refi. I'm going to use myself as an example. I have a DSCR loan that I hate. And I mean, I hate this DSCR loan. It's expensive and my APR on it is 8.3%. It's horrible. Okay, horrible. I'm spending like $1,300 a month just in interest, and the tenant pays like $2,200. Okay, that's terrible that most of the rent is just going to the bank. But I needed the money at the time. I was doing massive amounts of construction, and the house was paid off, so I did a cash out refi at the worst time possible. But in a year when I can get an interest rate in the high fives, maybe low sixes, now I'm going to probably cash out refi. If you can save more than 1% on your cash out refi, it's probably worth it to do the fees. And I think I would save over 2%. So that's a math equation that I like. And I'm going to be researching that, on multiple levels with my portfolio because real estate, we do very well with lending. Okay. And when you borrow $100,000 on your rental property, and that goes in my pocket, that's free cash, okay? I don't get taxed on that because I borrowed it. It's not actually mine. And so now is actually, I think, coming into a time when it's going to be really great to do a cash out refi, maybe pull some of the equity out of the property and then lower the rate. And then you could probably have cash in your pocket and owe basically the same amount with a lower APR. So, I love that. So, keep that in the back of your mind. If you're looking for lenders and a way to do this, Chandler and I, the hookups, we have so many great lenders that we work with. We'll keep talking about that. We also have some great sponsors for the meetup that we can talk about, but just keep in mind, what's your math? What's going on with your portfolio? How can we help you make more money with that portfolio? Can some of that turn into equity and use that equity to buy more real estate? Yeah, it'd probably be a great time to do that. So keep doing the math, keep watching the market and listening to people that aren't putting their hand in your pocket, and always buy low, sell high. What do you think, Chandler? We ready to go?
I like it. Never sell.
That's right. I agree. Buy low, never sell.
And I know we're trying to close this out. There's one more point before we close it. And you brought up this point, honestly. It wasn't me. Some things that you were mentioning, you talked about the APRs and everything. That's a way to kind of help yourself. Instead of they're like, hey, how can we make more money on this rental? Try to push the rent. You're like, hey, let's just try to save money. Let's try to get the interest rate down a point. Let's try to save on insurance. Let's try to save on ways to save to cut your price down and you keep the rent the same. Because honestly, right now is not the time to drop price. And so I thought that was a great point you made where you're like, hey, let's try to save on this side of things, on the loan side of things, instead of try to push on the rent side of things. So if you're not thinking about that already, start thinking about that. That was a big help. What you helped the client out big time with that. So
absolutely.
Well, we appreciate y'all listening today. I really enjoyed this one. This one's a good one. And it'll be good to look back on at the end of 2026 to see kind of how right or wrong we were. But we will continue educating y'all. We love doing it. There's nothing in this for us. I don't think I've made anything from doing this. I just enjoyed talking about it. But we'll see you in the next episode. Please share this as much as you can, and we will see you in the next one. Thank you.
Bye-bye.
Every setback just to settle for style. Stacking paper, vision clearer than glass. Hustle game tight, never moving too fast. Fields of green, seeds of sweat I sow. Running numbers, watch the cash trees grow.